Well. Welcome back to Bitcoin Advisors channel. My name is Chris, bringing you this lovely cryptocurrency video right from Westlake Village, California. Happy Taco Tuesday. Happy day before Fed rate hike day, and happy a couple days before Cinco de Mayo. But just combing the markets real quick, wanted to go over the last 7 days. Casper has been the top performer, Render in second place, Kronos, Internet Computer, Conflux up 7%, 17% or 18% almost for the top gainers over the last 7 days, as overall the crypto market has turned red. Even PP coin, the green, what is it, a toad? Is it a frog? Is it a meme? I don't know. But I did say yesterday that one likely to pull back. So, and I bet you it pulled back from that 618. Dollars continuing to bounce up to our green 55 target. And yes, it was 3 drives of hidden bullish divergence. Actually, that would be the 4th drive. That would be the 4th drive, including this low. So 1, 2, 3, 4. That's exactly what we were saying. 4 drives. And I couldn't be happier to be a trader based on divergences, trend momentum, and volatility. If you want to learn how to trade, stick around on this show. We're going to show you some of the keys on how to begin setting up trades for yourself using risk management. Now, what's interesting, today's, I found this article. It says today's surgery involves hand saws and generic sized implants. Over 100,000 knee replacements fail each year. And, bottom line is this company monograms precision surgical robots and custom joint implants are coming. They hope to change that. So their guided robotic arm is going to be doing surgery at an unprecedented level of precision. So again, what's that mean for jobs? That means some people are going to be losing their job because they got robot arms now. What else is going on? Since January, we hit $31.4 trillion limit. The Treasury Department has been using special accounting measures to stave off its obligations. Now they're running out of tricks, says Smellin' Yellin'. Yes, says a default could come as soon as June 1st. So again, Kobisi letter pointing it out. June 1st, debt ceiling. That's coming up pretty quick, 30 days. And from what I hear, that there's no budging on that debt ceiling. Yeah, right. They're always going to move the debt ceiling higher. What are we going to default on our debt? It's not going to happen. So money printer go burr. Good for crypto overall, probably. Yes. And what else? TED Talks. This is the other thing I want to bring up. Coinbase International Exchange will enable institutional user base outside of the U.S. to trade perpetual futures. Oh, and ultimately, here's what else was the Coinbase thing I wanted to show you guys. Let's see if I can get it up here. Treasury yields did rip yesterday ahead of the Fed rate hike. What was it? It was this. It was the CEO of Coinbase, Brian Armstrong. Let's see. Brian Armstrong. I've never really been a fan of Twitter, guys. Never have. And what was it? It's this interview with him and his legal strategist. They're talking about, oh, yes, we welcome the SEC and their Wells notice. We want to discuss, and basically what it is, look, the SEC said, hey, what is a Wells notice? They gave them a Wells notice. A Wells notice says, hey, the SEC is going to sue you, right? Just be prepared. And Brian Armstrong said, hey, look, we are prepared. We are prepared. We want to talk things out. We want to work things out. But if you don't, what's going to happen? Well, they countersued they countersued the SEC. And I'd say this is the ultimate plan. Brian Armstrong, another genius out there, comparable to, he looks, I mean, I'm looking for the interview here. It's on here somewhere. I guess I'm going to have to type in Brian Armstrong interview. Come on. There he is. Anyways, who does that remind you of? Is it Moby? No. Bezos? Who does that remind you of? Name that character. Anyways, very smart guy, very intelligent. You know, obviously has done a lot for crypto in the beginning stages. But overall, what does the SEC lawsuit mean for crypto, right? And you might be thinking, oh no, Coinbase is getting sued by the SEC. No, these guys are in bed with the SEC, okay? And I wrote a great, by the way, before I forget to say something, before I forget, there's a lot of scammers out there. I've officially reached like low level fame because people are now impersonating me on Instagram, on YouTube, on Facebook, on every social media, especially Instagram and TikTok. They got more followers than I do, the fake accounts. And they're DMing you saying, oh, you want to invest in crypto, blah, blah, blah. Look, I will never DM you. And I only have one Instagram account. Don't laugh. My personal Instagram account right here. It's Chris Mitchell _ Bitcoin Advisors. If you get a message from any other account than that, it's not me. And if it's ever about investing, pick up the phone and call me. Okay, you have my number. Friends, family, please don't send your money off to the guy that says, oh, invest $700 and we'll give you $7,000 at the end of the week. Trust me, it's crypto and gains are good and blah, blah, blah. It's like an AI robot. Pretty soon they'll have an AI person talking. So just watch out, be on the lookout. That's the Instagram. TikTok, close your eyes, guys. Close your eyes. TikTok is awful, as you can see here.
I coded Fortnite, so.
Oh gosh, sorry.
Every time someone follows me, I die.
Quiet. See, this is how obnoxious TikTok is. View profile. Okay, this is the real business. I don't have a personal TikTok. Don't follow this guy, anybody else. But Bitcoin Advisors. So we got Instagram, we've got TikTok, and we've got our YouTube channel. The official YouTube channel for Bitcoin Advisors home page. Sorry, I'm having to do this, guys. It's all at Bitcoin Advisors. Okay, we're very small. We do it for fun and for free. And if you are getting any scammers messaging you, please say no to drugs and no to somebody who says, here's $700 and or give me $700 and I'll give you $7,000. End of it. All right, back into Bitcoin. Sorry, I just had to do that, guys. I want to make sure nobody falls for the trap. Speaking of traps, we may have a trap before our very eyes formulating himself. And what did we say yesterday on the daily time frame? We said we were coming down to the bottom side of the range, and I suspect we do get some continuation, a bit lower still. You know, if we are going to hold the higher low structure here, well, technically the green 55 would be the target. We do have declining volatility now. And momentum will cross back up today above 28,637. We're well below that right now. 4 hours getting a bounce. Did get a slightly lower low there. Again, the divergence theory is holding true as we had 1, 2, 3 drives of bearish divergence. Hidden bearish divergence. What is hidden bearish divergence? When price is making lower highs, but the RSI is making higher highs. 3 drive variety gives you a shot to the bottom side of the range. So how would you have confirmed that divergence? So again, 1, 2, 3 higher highs in RSI and 1, 2, 3 lower highs. It would have been confirmed, technically on this candle right here. This is the one. So we're looking for a move down to the bottom side of the range. Does it happen all in one swoop? Nope. Does it look like we're going to bounce to the green 55 and play out a nice little mean reversion bounce? Yes. To be fair, it does look like I'd be targeting a move. So on the other side of bearish divergence, what do you always have is you have bullish divergence, typically. But I don't see any of it forming yet, except for one drive from this pivot right here. One drive gives you a shot to the 9. So I would expect a rejection here or here, and then continuation down to 27,218. Now, I've been talking about this one right here. And we could get a lot of volatility tomorrow surrounding Jerome Powell and the Fed rate hike. So let's get into some of the underlying market dynamics before I give away the gold. Stay to the end of the show, and you're going to get the exact price target to the upside and to the downside, invalidation points, and let's get into what is likely to happen. So again, debt ceiling, another massive event at the end of the month. I don't know if we even covered Michigan Consumer Sentiment Survey. That came out while I was sick. And I was so sorry not to be with you guys at the end of last week as I was a bit under the weather. An extended weekend. I think that's why I can't sleep, because I literally slept too much. And now, now it's like, oh, you only get 4 hours of sleep at night. Michigan Consumer Survey Index. Is this the one we want? Bank of St. Louis, November 2022. The report came out April 28th, so I'm going to put April, 23. Michigan, so inflation expectations, consumer sentiment, April 2023. Was it higher than expected? Let's read really quick here. The University of Michigan consumer sentiment for the U.S. increased to 63.5 in April from 62 in March, so it went up. In the preliminary estimates, a rise was seen with both current conditions, 68 versus 66 in March, and expectations. Meanwhile, inflation for year ahead is seen jumping to a 5-month high of 4.6 from 3.6%, while the 5-year gauge went up to 3% from 2.9, despite increasingly negative news on the business conditions heard by consumers. Their sort of long-run economic outlook improved modestly last month. These improvements were balanced by worsening assessment of personal finances due to higher expenses reflecting ongoing pain stemming from continued high prices. So what do I take from that? That's the biggest jump we've seen in a very long time for inflation expectations. Again, Powell's going to have to talk dirty to us, similar to what we saw back at Jackson Hole. I could be completely wrong, but that's what my gut would say is, look, Powell said he wanted to inflict pain on the market. We're going to have to go through some pain in the markets. Have you checked your home's value lately? Mine is at an all-time high. I live in California, so everything's high. The stock market is not in pain, okay, unless you bought some bank stock. It's down 20%. Okay, we also have so that was the NASDAQ down 19%. S&P down 13% for the year, or from the highs, and we've got this guy coming in only down 8%. So Dow Jones leading the pack here with a recovery. So it's going to get faded, guys. It's going to get faded. And what I've been saying all along is more bank failures, more bank failures. SVB Bank was just the beginning. And what's important to note is two things are going to happen this year: a bond crisis and a recession. Bond crisis and a recession. Economic booms or expansions are always followed by recessions. It's just how it's been, right? And when the Fed tightens, recession. I'm not David Rosenberg. I haven't studied every single recession since the beginning of time. However, it makes sense. Economic contraction, and then, expansion, contraction, expansion, contraction. So have we gone through the, contraction phase yet? Is it going to happen this year, or is it going to happen next year? I'm not 100% sure, but more pain to come with bank failures. And yes, depositors will get hurt. Why? Because you know where they get the bailout money. It's from you, me, and everybody else. And I'm going to stick with my theory here that the next bank failure is likely going to push Bitcoin higher. So even though I think we're going to get a short-term pullback here based off all right, so that was, more underlying market dynamics. Let's look at them all. Remind ourselves why we're here: to learn, not to follow my own social media. But we got crypto quant fear and greed index coming in at a 55. All of a sudden, people aren't so greedy, but they're still greedy. Leverage ratio coming down, so leverage positions coming off, shorts getting liquidated, or longs getting liquidated, and you've got 8.26 billion in open interest. That's all the leverage positions on the board, still coming down, and that's where you see those 20% corrections as we hit the highest point of leverage for the year. That is 2023. That is. So 20% correction, typical when leverage begins to correct. So have we had a 20% correction yet? No. Where would a 20% correction take us down to? Is that 24.8? 24,800? Yes, it is indeed. Yes, it is indeed. Glad I took a look at that. Okay, we got all the underlying, not all of them, but most of the underlying market dynamics out of the way. And all right, so let's get into that divergence we talked about on the 3-day, which will be confirmed in 1 day and 10 hours. 1 day and 10 hours, and we will have one, two, three, 4 drives of hidden bearish divergence. And based on our theory, the one theory that I've coined for myself, it's that typically gives you a shot to the 1618. If you use the wicks here, that's coming in right here at $25,021. Look, if you guys have been talking to me in person, if you've been talking to me if you've been following our YouTube channel, you know that's the target I've been talking about for a very long time now. Where else does it line up with in confluence with the rest of the market? So that would be my target, guys. If I'm wrong, well, I'll tell you how we'll know that I'm wrong. That's right at the 0.5 and the 618, kind of that, not necessarily the golden pocket, but close enough is close enough there. Let's see if we go on a wick basis. How do the fibs get it right? I don't understand how the Fibonacci's work, but I do know that they do work. But that is, yeah, definitely giving some confluence there for the last major rally. And yeah, if you use this entire rally, could we get a wick down here to 23 or 22? Yes, depends on how violent Powell wants to be, but it to me it seems like he's not going to be that aggressive. He has to say something to let let the markets know that yes, we need to tighten more. Yes, inflation isn't under control. Yes, what is their federal mandate? Federal mandate of the Federal Reserve is to price stability and full employment. Price stability and full and maximum employment. Now, speaking of that, the last thing on the list, myfxbook.com, economic calendar, if you don't have that resource. And please do, guys, if you're enjoying some of the content, finding it valuable, drop us a like and subscribe to the channel. So look at that. JOLTS numbers, job openings, job quits, all came out bearish for the dollar, or probably higher than expected. So job openings, no, lower than expected, bearish for the dollar. JOLTS job quits, lower than expected. So that is bearish for the dollar. And factory orders, lower than expected, and factory orders month over month, lower than expected. And that has been the trend. That says, hey, Jerome Powell, what you're doing is working. So dollar go down. It's been an interesting story of the dollar and when Biden got elected and how this, has all played out. But yesterday was the global services PMI. I believe. Global, that was the one. So below 50, the economy is contracting. And I did see another report that the IMF was saying, look, they expect GDP to be at 2% next year. And over the next 5 years, it's going to be 3% or something like that. Very, very low numbers for growth over the next 5 years. That's what they're suspecting. Who knows? We could get a bunch of mechanical arms, another bailout, another stimulus thing, and who knows what that will do. But back onto Bitcoin, if we do get this pullback down to 25,000, my overall opinion is macro up. Pullbacks are healthy. We just had a 100% rally, come back down, and you'll notice, actually, if we get a tick below here, very likely we come all the way down to 26,000. That is going to be your first warning sign on the monthly, the 2-month, the 3-month. That is perhaps going to close as an indecision, and we're, slightly coming into a 6-month candle, which will produce some divergence, and that, as long as we close above 25.4 in the next 6-month closure, that will be another higher low, and you could expect that shot up to the green box of peace and prosperity and death and despair. All right, that's it out of me for today, guys. I'm sure you've had enough. Let's check back in tomorrow and see what Mr. Jerome Powell, will he spank the markets again? I don't know. I really don't know. But my guess would be, yes, he has to come out with a firmer hand. you know, there's still inflation. Home prices are still going up. You know, overall, the economy still healthy. Job market's healthy. He needed to inflect some pain. How do you inflect pain? Well, you make the stock market go down. And I think it's all going to be bullish for Bitcoin. That's the crazy thing about it. We'll see. We will see. Again, you know, revisiting our overall target. Now, this can switch around here pretty quick. If that 6-month closes above there, that'll just be another higher low. I'd expect new all-time highs. If the S&P closes anywhere above 4350, game changer. Done. Wrong on this call, and you know, got to call it wrong when it's wrong. But overall, that's in the cards right now. And what else? Also, tether dominance on the 6-month. Okay, tick below there. Probably going to see some altcoin party. Making a higher low, though. Forming the higher low. Don't want to see that monthly close above there. Lots going to happen this month, guys. A lot is going to happen this month. This was a bit of a deviation below this trend line, and now we're back in the triangle, the ascending triangle, and we do not want to get a break above there. Looks... I don't have much to say there. Bitcoin dominance, again, looking healthy and girthy, and probably makes another leg higher on Bitcoin dominance. So altcoins, it's not alt season yet. It's not there yet. And then ETH Bitcoin, again, massive consolidation. You know, we're just at the top side of the range. Now, bottom side of the range, probably in the cards there. All right. Again, I think that was enough out of me today. I hope you have a blessed and highly favored day. I'll bring you back some more. Oh, yeah. So we're assuming the downside target for Bitcoin on the 3-day time frame. If we do close tomorrow's closure anywhere below here, right, where's the invalidation point come? 3-day closure, really... Let's bring it down to the daily. Daily closure. We said back above 28.8. 28.8. You can see now momentum on the daily has crossed back up. Or was that CME was down? No. CME's up. Volatility is contracting. So any kind of a daily closure back above, yeah, that 28.8 or 29.5. If you're more aggressive, 28.8, 28.8, yep. Or if you're more conservative, 29.5. All right, that is out of me today. I got here a little early. Wanted to get this video out of the way and to you guys before you get to your day. I'll see you tomorrow. Take care.